You are listening to chartingwealth.com for Tuesday, the 27th of March, 2018. This is the last week in March. Don't forget, on Friday, we will be recording, in addition to the comprehensive review and forecast, the quarterly end. We will be recording that special edition where we will look at our purple trend lines. It's the biggest chart that we look at. That is our quarterly chart on the S&P 500. It is indeed a magical chart. For those of you who are actually watching the podcast in video, you can see the quarterly chart is an amazing one. It has called market tops and bottoms accurately over the last 20 years, going all the way back to the year 2000, actually beyond that. And we see over and over again how this chart was. We have the Trump effect that occurred right there at the beginning of 16 when the market started to tank. And with Trump coming in, it turned around and has been going up since then. Pretty amazing stuff. But we will look at our purple trend line yet again. We will do that this Friday, so it'll be available for you over the weekend. Now let's jump into what's going on in these markets. Booming for the day based upon the fact that the markets don't want to go down. The folks who are invested love to see things go up, 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 and the inflation continues. Now, we see that we're going into the second week on our Heiken Ashi candlesticks of the average pace down, however, up big on the day Monday, 2.76% on the S&P 500, allegedly based on news that maybe the trade war with China is not looming as bad as the market originally thought it was. Might be wishful thinking, but we do see the price percent oscillator still headed down. Derivative oscillators lost some of that downward momentum as we tune in a little closer. Now, those of you who aren't familiar with Heiken Ashi candlesticks, please go to the website chartingwealth.com or to our YouTube channel. I think we're up to like 67,000 views of that one training, our most popular ever on Heiken Ashi candlesticks. It means average pace in Japanese, and we can see that average pace has dropped off even more on the 2-day trend line. Also, derivative oscillator and the price percent oscillator both heading down quite strongly. Now we see what happened over the course of the day on our 4-hour chart. Price movement well below the weekly and the 2-day trend line, but we do see an uptick over the 4-hour period, up candle in the morning and sort of a spinning open box, green candle in the afternoon, spinning top. Again, up movement. Not going to make light of the significance of the 2.76%. We do see the price percent oscillator has kinked up on the 4-hour chart. Derivative oscillators lost downward momentum. Again, we will watch and see how this plays out over the course of the week. Was it exuberance? Was it folks wanting to really run out the shorts? We'll just have to see how things continue. But again, we will let the charts guide us. And we were not in that play on the S&P 500. We were looking at what was going on with it, waiting for that pullback to be underway. And we'll just continue to keep an eye on things. Keep your eyes on it. Maybe we will have a pullback and then a rotation over for a time to jump in. If you look at that 2-hour chart, you can see where there was a jumping in point back at 10 a.m., well, around 10:30 or so on the 22nd, Thursday. And of course, it flattened out and rolled over, crossing up in the afternoon, which is where things really took off that last candle of the day on our Heiken Ashi candlesticks. Okay, back to the weekly chart. Going to go to the Qs. That's where we saw the most exuberance, up 3.72%, a big, big up day. The price percent oscillator not going down at the same strong angle it had been. Derivative oscillator still gaining downward momentum, have a down candle drawing at this point. Now, as we look at the 2-day chart, we of course see that it is still angled down, not at quite the same angle. Derivative oscillator gaining downward momentum. Up candle we see so far. Now, of course, we ended the week with that weekly vertical crossover on the 23rd. First day of the latest 2-day candle is a green up candle. We're going to talk about entry points if there were any over the course of the day. We see, of course, that the up movement was in the morning, more exuberant up movement in the afternoon. Price percent oscillator is definitely headed up on the 4-hour chart. Derivative oscillator gaining downward momentum. Now, as we look at, well, we have two methods, of course, of jumping in after a weekly vertical crossover, which we had on Friday going down. We, of course, had a green up candle for the first candle in the morning. If you were just going by the 4-hour chart, then, of course, you would have said not no, but hell no. If you would have been looking at the 1030 chart, we saw how the market originally bumped up strongly in the morning with that China news and then started moving down at the 1030 slot. But after that strong bump up and the fact that the 30-minute chart was rolled over into the positive, would not have been a smart move to jump in then either. Of course, it ticked off after the initial idiot hour bump up and then started rolling back up in earnest in the afternoon, completing its high. So again, either by the 1030 chart, the 30-minute chart, or the 4-hour chart, no jumping in point for that down trade. Now, what does that mean as far as the weekly vertical crossover goes? Well, it means that we will wait and see. Back to our standard method, if there is a pullback, which there is underway right now on that 4-hour chart, and then if it rotates back over going down, then of course we would look to jump in and ride that down move. That's the way we play that week in, week out, day in, day out as opportunities present themselves. That's where we are on the cues as it ended the day on Monday. Let's jump into the 20-year bond. What do we see going on there? Well, we appear to be going into our third week of pretty decent up movement. Price percent oscillator heading up, not at quite the angle it had been over the course of the last week. It was down for the day on Monday, 0.38%. Derivative oscillator continuing to lose downward momentum. And again, price movement is above that 2-day trend line on the weekly chart, but not strongly. Let's look at that 2-day chart for the first day of the latest. It's a red down candle, and it's still above the 2-day trend line. Not super strong. Price percent oscillator still heading up. Derivative oscillator losing some upward momentum, but again, price movement is above that 2-day trend line. Now remember, we've got a weekly that's headed down, a 2-day that's headed up. Some point we want to see that 2-day chart have enough strong up movement that it pulls the weekly over, or vice versa. The weekly has enough down movement, it pulls the 2-day over, and we start opening up some trading possibilities. 4-hour chart appears to have topped out and sliding sideways now, going on 3 days. And we will see, looks like the 4-hour chart's getting ready to cross over, going down. Hasn't done that yet. We're not going to call it, but we'll just wait and see. Again, price movement still above that 2-day trend line. We'll see what we see there. Okay, lastly, we will go to gold. Now, gold was getting close to crossing over, going up at the end of the week, and of course, we see it has crossed over strongly on Monday, heading up with a nice, big, strong weekly candle. And again, that's just the first day of the latest. It's our Heikin Ashi candlestick. Derivative oscillator still negative. Price percent oscillator heading up quite nicely, up 0.53%. We look at the 2-day chart. What do we see? Well, we see that it, of course, crossed over on Friday, and we may, by the end of the week, see the weekly having a weekly vertical crossover, heading up strongly, the 2-day, both on the derivative oscillator and the price percent oscillator, and on price, blowing through and rising above that Bollinger Band, the volatility bands. What do we see on the 4-hour chart? Well, of course, it crossed over back in the morning on Wednesday the 21st, and it's nice to see the 4-hour chart actually working because we have some real price movement in gold. We hope to continue to see that 4-hour chart working strongly for us. It did top out about the same spot around 128.30, something like that, 128.40, both in the morning and in the afternoon. Derivative oscillator lost a little bit of energy late in the day due to that. So we'll continue to keep our eye on gold and see if and when trading opportunities open on all of these charts. That's where we are, folks, as we end the day on Monday, going to Tuesday, the 27th of March. God bless. All the best from the whole team here at Charting Wealth World Headquarters.